welcome to another segment of the Everyday Pro Investor Weekly Market Recap. Yeah, just Brian here again. Evan's off, he's busy, so we'll try to keep this short and sweet. So let's talk a little bit about last week. So wake up Monday morning at sometime about 3 a.m. Eastern time, the founder and chairman of Nikola, Trevor Milton, actually had put in his resignation, stepping down from the company. So we've talked a lot about Nikola the last few weeks, and we've been back and forth on, what is it a fraud? Is it not? This is really interesting because if your founder and chairman is willing to step down so easily, that just smells of bad news. Whether it's complete fraud or not, I don't know, but obviously there's some wrongdoing here if he's already willing to step down and this thing's only been going on for about a week and a half. So really interesting thing there. We've mentioned stay away from this stock. It's not something you want to try to trade or invest in. It's just way too volatile. Who knows what the truth is, but that's something that was really interesting to note. And what bothers me is obviously there's some wrongdoing here. And then when you look at what he had to forfeit by stepping down, it was $160 million worth of stock, which sounds like a lot of money, but he actually gets to keep about 92 million shares. Now, mind you, again, he's the founder and everything, but if this company is a fraud, how come he can get to keep anything, right? Because when he actually stepped down, at the time he stepped down, those 92 million shares were worth about $3 billion at that time. So he gets to leave the company a billionaire, and potentially this whole company is a fraud. I don't know if that's actually the case. Maybe he just did some wrongdoing and he's stepping down before things get really bad for the company. But nevertheless, another interesting twist in the saga of Nikola. Moving on from that, though, we are starting to get some earnings. We're going to start moving into earnings season here. And Nike reported, and wow, it was a really good quarter, really, really good quarter. They beat on revenue, beat on earnings. Revenue was basically, year over year, I want to say it was about flat, maybe up a little bit, but what the real positive is when you look at digital, their digital growth is really, really strong. Obviously, that's helped out by COVID-19, but this transformation to the direct-to-consumer rather than relying on retail is really a big beneficial, or Nike's going to be a big beneficiary because their gross margin should improve direct-to-consumer versus going through retail. So really positive thing there. Stock popped on the news. I think it went from like 114 to 125 or 128, something like that. It's since pulled back a little bit. I want to say it's around 123. I wouldn't enter the name here if you're not already in. You might get a better chance. It could pull back down. It could fill that gap, honestly. But I would say Nike's undervalued if it gets back there and that you want to buy in at that point in time. So looking out, obviously we've got the election coming up. We've got a volatile market right now. We've been lightening up on a few things, just raising some cash. We always like to keep a little bit of cash on the sidelines, but now we're looking to raise a little bit more because I think volatility is going to play a really big role here over the next few months as the election gets closer. And after the election, I don't think we're going to get clear results right away, especially with all the mail-in ballots and everything. So I think there's going to be a pretty contentious month or so, maybe even 2 months after the election where we don't know what's going on, and the market doesn't like when it doesn't know what's going on, when it doesn't feel like it's in control, and you'll see volatility rise at that point, and I think you're going to get some crazy sell-offs, and so we want to have some cash in order to go into some other names that we really like. So we actually sold Qualcomm and JP Morgan. JP Morgan, we made probably 5, 6, 7% on it, something like that. We had a trading position and a core position. We had sold the trading position a while ago on a buy, right? The core position we just got out of with like 5, 6, 7% gain. The reason for that is there's a report that came out about the banks that they had been taking part in money laundering, and it listed a ton of banks. The banking sector sold off. If JP Morgan does get back down towards 90, which I'm not saying that's going to be the bottom necessarily, it could actually probably head back towards 80 to be honest. But if it gets towards 90, I'll probably look to put a call spread on or something of that nature. And then I'm going to be really opportunistic when I enter back into the bank names. I actually have been, we own Goldman Sachs. I've been looking at potentially adding to that name, so I think this volatility is going to help their trading desk out a lot. Qualcomm, really like this company still long term. 5G is going to be a big boost for them. We made really good money on this. This was a name we were buying back in March during the downturn, and it was just the right time to harvest those profits, we thought. Now, we'll continue to watch this name. We like the 5G play here. We like all the technology they have. So if it trades down to the right number, we'll look to get back in. Like I said, hopefully during some volatility here in the next few months. And then something I learned throughout the week here that I thought was really interesting. There's an application, Yotta Bank, I believe is the name of it, Yotta. So the goal of this app is to get people to be able to save more money. And rather than just paying out a defined interest rate, it actually turns into like every $25 or something like that you deposit into the savings account, you get a ticket into their weekly drawing. I think it's a weekly drawing. Basically, there's tiered prizes, and it's kind of like a lottery, and you're guaranteed to get something. But I think like the top prize might be $10 million, right? Now it's divided up amongst all the people that hit those numbers. But when you break it down, basically they're offering like 2.5% interest, and it's going to vary based on how you do on the prizes, obviously. But that's way better than most high yield savings accounts right now, as well as the lottery style fund savings environment. I think is really going to encourage people to save more. So if you haven't heard of it, check it out. Yotta, Yotta. Really interesting application that I think is going to be good to get people to save more money, and it might even help. Hey, if I play $50 a week in the lottery, well, if I just put that $50 into savings, I still get to actually play the lottery in a way, but I'm also saving money. So hopefully that'll encourage people to save more money. Really interesting application there. Moving on, though, from talking about the market last week, let's talk a little bit about some individual trades. So we talked about LULU. We were selling a 275 put. We were going to buy the 310 calls. So on Monday, or from Monday to Tuesday, those 310 calls actually jumped like 400%. At that time, we tweeted out, we said, hey, depending on, you got to manage your own account, but depending on who you are, you might want to look at selling some of these. We didn't know how much more upside was in the 310 calls. Now, what we didn't know is LULU was going to announce that they're buying back shares again, which sent the stock even higher before it traded back down. So if you would have actually held into Wednesday, those calls would have actually gone up something like 1,200%. Now, who knows that they're going to announce something like that? Once we're up, 200, 300, 400%, generally we like to at least trim, or if we only own one or two of those calls, generally we'll just end up selling out of that position. So depending on, you got to manage your portfolio, like I said, but you could have made 200, 300, 400, even 1,200% on that part of the trade. Now, we recommended you still hang on to the 275 puts because that's a level that we would be willing to own the stock at. So we're still holding that put. It's probably going to expire worthless, which is good because we sold it. So we'll actually get to keep that premium that we collected on it. But we're not going to close that, because if it does trade down to that level, we'll be more than happy to buy into the name at that price. So for this week, though, what I was looking at was SBUX. So this name broke out from about 82.50. It was a pretty defined level right in that area. And the stock recently broke out from that level, headed straight to 90, which is kind of where the next resistance level is. And with the sell-off recently, it actually has pulled back, almost touched that 82.50 level exactly, right where it broke out from. It's since bounced to about 84. So what I'm looking at Monday, I'm looking at the 10-16, 85-90 call spread. I'm going to buy the 85, sell the 90. I can get that for about $1.50. I think there's a really good chance over the next 3 to 4 weeks here that we're going to see that stock move back towards 90. And I think that you could easily double your money in this name. If you want to have unlimited upside, you could go buy that 85 call. It's actually not too expensive. It's right around $2. So if you're looking to just play this for outright upside movement, I would go ahead and just buy the 85 call. Then we're looking at the call spread, just trying to help keep some of our costs down. Like I said, with the volatility, you get a trade wrong. It's always nice to kind of have a spread there because the damage isn't as bad. Moving on to the sectors part of our segment. So we talked about XLP last week. It had a sell-off really fast. We were actually looking for this thing to take a little while to sell off through our put spread there. It actually happened, I believe, Monday or Tuesday. It full-blown went right through the put spread. So at that point in time, you want to sell out. Anytime you go through your spread all the way, there's really not much more upside, because what you're playing with there at that point in time is the time value. So you got to just keep waiting and waiting in order to get more value out of it. So usually if you go right through a spread, you end up just closing it at that point. So if you did that, you made good money. That trade happened a lot faster than we thought it would. Looking at this week, though, I don't really have a particular sector that looked appealing to me, either from the long or short side. But I've mentioned volatility a lot in this video, and that's actually what I'm looking to go long over the next month or so. I want to get long volatility, especially right now where we're still at relatively muted levels given the environment that we're in. So the VIX is like roughly at 26.50, 27, something like that right now. I think it could potentially tick lower this week. I think we might have an up week. We've had 4 down weeks in a row. And if it ticks back down towards that 25 level, I want to say the recent low in like the last 3 months is around $22 or 22 on the VIX, 22.50, something like that. I'm willing to get in at the 25 level and start looking to play this in a couple different ways. You can either go out and you can buy VIX calls. Now, these are not American style options. They're actually European style options. So what that means is in an American style option, you can exercise at any time it gets into the money. European style, it actually can only be exercised on the day of expiration. So the VIX options actually don't move nearly as much as like an American style option would in an equity. So that's one way to play it is with VIX calls, but your timing is really important on those. Because let's say that you buy the 30 call for like mid-November. In October, it actually goes to 40. So yes, your call option will move up in value, but if you don't sell it to somebody else, you can't exercise at that point. So you got to sell it to somebody else. If you don't, let's say you get to expiration and the VIX is trading at 20, it's a loser. So the call options are a little bit different there. Another thing you could do instead of buying calls, you could go sell puts. If you I want to sell the 15 level puts in the VIX out in November because I think it's going to be trading higher than even where it's at now at 25. That's another way to be long volatility. A couple other ways to do it, especially if you don't want to trade in the options market. There is some ETFs that follow volatility of the VIX. So VIXY, that's basically going to try to track the VIX in its movements. It's a non-levered ETF, which most VIX products that are ETFs or ETNs are going to be levered. So that's one way to play the VIX, just pretty much one for one. Another product is the UVXY. That is a 1.5 times levered ETF. So it's going to give you 1.5 times the performance of the VIX on a daily basis. So that's one interesting way that I think you could get into. Like I said, if the VIX pulls back near 25, you could get into that product, and then you could hold it out. I think you're going to be able to hold it into maybe mid-November, even into December through the election time period. And then if you're really feeling confident in this trade and you want to be long volatility, you could go with TVIXF. Now, this is a 2 times levered ETN. It's going to track the VIX and give you twice the performance, basically, of the VIX, right? This product, for instance, before March was trading at, I want to say, it might have even been down as low as like $10 to $20 a share. During the peak of the volatility in March, this thing traded up over 700. And again, that's because this is levered. So just like it can go up that fast, it can go down that fast. Right now, it's trading around 60, maybe $65 a share. You could easily see this thing go down to 30 in no time if this trade is wrong. And that's why I want to point out the risk here, because this is risky. I do like this play. I do think that volatility is going higher. I don't think we're going to get back up to 70, 80 VIX, but we could see a 40, 45, something like that. So you could get that 4 handle there. And I think that if that happens, this product is going to give you the most return. So you can play the TVI or TVIXF if you're really confident in this trade. I wouldn't put too much of your portfolio into it, though, unless you're willing to take on that risk. So it's a really interesting product. It's the one I kind of like the most at this point in time, but I will size it appropriately, and I'll also manage it appropriately based on what we see happen in the markets. So with that wraps up the week for me. I do appreciate everybody watching. If you're on the podcast, appreciate you listening. If you haven't already, go down, hit the like button, subscribe, follow our videos. And if you like what you hear, go check out our website, everydayproinvestor.com. We really have a great trading service. You can follow us in real time. You make the trades that we make. You get the performance that we get. And there's a lot more trades that we do throughout the week than just what we talk about on the video. So if you want to trade in real time with us, go check that out. And let's have a good week.